Hey guys, welcome back. In today's video, we are talking about the Vanguard selling AMC news, hedge funds borrowing at all-time high, why AMC is about to win, and many more in this video. So I want to quickly address this. I've seen people talk about how Vanguard has sold every single one of their shares on AMC. It's because on the filing, you see that it had 30.5 million shares and now it's zero. But that's not actually the case. And it's very important to be able to differentiate between Vanguard selling all their existing shares of AMC versus them actually reporting in different subsidiaries. So what we are seeing right now is that they will report their AMC holdings separately. Now, Vanguard did report selling 20 million shares between Jan 1st and Jan 26th or 2026, but that 30.5 million shares will be in 15 other VG ETFs and index funds. So they still own what you saw here in the past, that still exists. The 30.5 million shares is still held by Vanguard. They're just reporting it under different firms. And so it's not a case of Vanguard has gotten rid of AMC before anyone starts taking that and talk about it's the end of AMC, it's the failure of AMC. And you have to bear in mind that Vanguard did this for multiple other firms as well. You can see from these screenshots, it wasn't just AMC. And so before kind of the haters or anyone who wasn't sure and didn't get the right news, this wasn't a case of Vanguard selling 30.5 million shares of AMC. Just wanted to put that out there first. Now, the real question people should be asking is, how big is the naked shorting? So we have to realize that the naked shorting of AMC may be far greater than any of us have ever imagined. And we have imagined some enormous numbers. So one of the things that we've always talked about has been how many times the flow of AMC has been shorted, how many synthetics has been created, how much have they naked shorted AMC. And we never had a number for this because, well, frankly, we don't have a exact data of it. What we do have is other data that does give us hints to allow us to understand what is happening. For example, in this instance, what we see is that hedge funds have been borrowing a lot of money since 2021 non-stop. And you can see this here since 2021, especially since the whole AMC and GME, we've seen how the money has spiked up and now we are at an all-time high. And this just goes on to talk about what we've said in the past as well with the reverse repo when we saw it go all the way to $2 trillion. It's the same thing. Ever since AMC and GME exposed the problems of these naked short hedge funds, naked short market makers, of these brokers that are over leveraged and that could easily get margin called, like we've seen with Robinhood, we've seen all of these problems arise. And it's how we know that the synthetics, that the naked short is at an extremely high amount. Because if it wasn't a problem, firstly, we won't have seen the continuously manipulation and suppression of AMC for the last 5 years. But more importantly, we won't be seeing them borrowing hundreds and hundreds of billions of dollars and spend it in places that they're not even reporting. Especially in this case, we know that they're very likely to spend a large amount on AMC and GME. And so it's why we've said that the naked shorts could, in reality, be way bigger than any of the numbers being thrown out by anyone. Of course, if we're going to say something in terms of tokenization as well, where we've seen 4 quadrillion tokens of AMC, but the biggest thing about that is that we don't know what the ratio is. Now, the reason why it's still important is because we know the whole case with FTX, where they said that they had 1-to-1 backing of AMC shares, in which they had over 500 million AMC tokens. So meaning that they had 500 million AMC shares when we knew that that wasn't the case. Now, in this case, for the 4 quadrillion tokens, we don't know what it was backed to, whether it was 1-to-1, 1-to-100, 1-to-1000, because that obviously makes a big difference. If they claim to be 1-to-1, then that means we could have seen 4 quadrillion AMC synthetics being created. To me, that doesn't sound plausible. It isn't to say I don't think it's high, but to say 4 quadrillion, that's obviously in a different world right now. And so the ratio could have been 1-to-100, 1-to-1000, maybe that. But it doesn't change away from the fact that they needed this many tokens. It is still a high amount. It's just that it's not 4 quadrillion. And so we know that the hedge funds have been struggling and borrowing money. And you can even see here, why is it virtually that all AMC trading volume happened after AMC went flattish following the ape conversion and RS in August 2023? And why is it that sellers so massively have failed to deliver the shares they sold since that time? So we've seen some of the manipulation they've used in the past before. We've seen how they try and suppress AMC. One of the biggest things have obviously been with the ape shares as well. We saw so many problems that were exposed by the ape shares. And AMC have obviously exposed those problems as well, but we saw a whole new different set of problems when ape got released. But in this case, we have to understand about all of these fails to delivers, because AMC has appeared multiple times on the NYSE threshold securities list due to persistent fails to deliver. Notable streaks include multiple weeks in early 2023, CEO noted over 3 weeks, and from June 23rd of 2023 onward for several weeks, with daily FTDs often exceeding 10 million shares. Earlier appearances in 2020 to 2021 too. Now, the reason why this is important is because, firstly, for FTDs to be over 3 weeks, this is something that no one ever talked about before, but it happened when it happened to AMC, when it happened to GME. The fact we saw it exceeding 10 million shares daily, that was already a crazy amount. But then what was even more that was needed to be talked about was the reason why we focus so much on this is because when you're on the threshold list, you are entitled to this T+13 settlement days. And yet for AMC, for GME, we never saw that happen, because remember, we went past T+13. We were seeing 3 weeks, multiple weeks, we were seeing over 30 days, and yet we didn't see the T+13 being applied on AMC here. And to go back to what we've said with here, with the massive fails to deliver, it just talks about how many shares they have truly shorted, but also the liquidity problems that these guys are facing. Another example of this is that the cost to borrow uptrend continues on, while volatility grows exponentially. People not realizing how massive this uptrend really is, while being manipulated is still plain as day. And so earlier we talked about, we don't have exact data to confirm to us how many synthetics there are, but there are data that we can use to obviously come to a deduction of what it could be. Now, whether it's with what we talked about here, whether it's with how much money they've been borrowing, all of this and the cost to borrow, all of this is just showing exactly what's going on. Bear in mind, recently we've had a user use their algorithms to essentially work out how much synthetic short interest exists for AMC, for GME. Now, the data that they used in there were data like FTDs. And so this is why it's very, very important for us. And a big reason for why we see the manipulation is that the only reason AMC is below $1 is to get apes to stop buying as often. Someone must be getting tight on the liquidity, since it's all getting recalled and market sucked dry. So firstly, what we have to do is, what we have to understand as well, I personally think there are multiple reasons. Now, I do think one of the biggest reasons for AMC to be below $1 is because they do want to prevent people from buying. They do want to prevent apes from buying AMC, because that ultimately forces them to create more synthetics. We already know that the real float has been bought up by the apes and no one has sold, or at least 99% haven't sold. But we are still able to buy AMC. And that's because every time we buy AMC, these market makers have to create more shares. And those are the synthetics that are being created. And we put pressure on them when we force them to create synthetics. Now, for the apes, what we have to understand as well is that every time we force them to create synthetics, the exit price gets higher, the squeeze price gets higher, and we get closer to the squeeze. Now, obviously, there's another reason for why AMC is below $1, which is to prevent AMC from raising any substantial cash without having to sell a lot of shares. Previously, and everyone could understand this, if you are AMC, when AMC was $1, they have to sell 100 million shares to raise $100 million. But if AMC was $10, they will only have to sell 10 million shares to raise $100 million. So the same amount of money raised, but we are selling way less shares. And that's what they're trying to prevent. They're trying to prevent AMC, firstly, from making money, but secondly, they want as much shares of AMC as possible. And that just goes on to talk about how much demand is actually there for AMC. You have to understand right now we're seeing under 500 million market cap, path to 5 billion plus financial year of 2026, not going bankrupt, Mario openings, all of these massive movies that are coming out. If you take a look at this, we've already surpassed 2024's Q1. And if you want to look at just how busy kind of AMC cinemas are, here's just a picture of all of these that are going on. And this is very important because firstly, there's ticket prices. Now, some people may be using their membership, but not only are we talking about ticket prices, we obviously have these patrons who are then buying drinks, who are buying snacks, and this is going to add on to the revenue as well. And we've already talked about how efficient AMC is with that. If we take a look deeper dive into the Q1 of box office, there's something I don't want to talk about that I don't see a lot of people mentioning, and I think is very important. So firstly, we are at 1.63 billion. As of right now, this will be the second best Q1 post-COVID, the best being 2023. But there is a big thing that I want to talk about here. It's the fact that we are not that far apart from 2023. Now, yes, we're still second, and so that's that, but we are not that far apart. The biggest takeaway I want to talk about here, and this really talks about how well the box office is getting and the movie industry is getting, is that you can see the #1 release during Q1 of 2026 has been Avatar, Fire and Ash. And this was only a 9.4% of the total box office. Previously in the past, we're seeing movies like 13.8, 15.7, and in the best Q1 of 2020, since post-COVID, it was 16.3. So now we're looking at 9.4, almost half of what we're looking at here. And the very fact we are able to see this is actually a very good thing, because it doesn't mean we need to rely on one movie to let us have a good quarter of box office. It means that almost every single movie, the consistency of it is bringing in cash for the box office. And that itself is very important. It means that we don't need to wait for a massive build of a movie like Avatar, like Dune, like Batman. We have consistency where movies that are getting released are just seeing very good numbers. And that's what we ultimately want, because then when we do get a good movie, we're going to see the number go even higher. And so you can expect the box office to grow exponentially after this. And it's not complicated. The industry and AMC is about to win. Just like the example I just gave in terms of understanding how more and more consistency with movies that are doing great numbers, this is going to be very important for us. Obviously, we have to wait for the Q1 report in May, but it doesn't change away from the fact that we are seeing how well they're doing. And so it looks like for the next couple months, we're going to be seeing potentially even more desperate attempts by these short sellers, because they want to try and print as bad of an image as they can about AMC before they release their Q1 report to show how well we've done in 2026. And of course, that would show how well we're going to do for the rest of this year. And everyone's focused on the sold out and almost full AMC theaters across the US, not realizing that Odeon Cinemas, the major European cinema chain owned by AMC, has also experienced sold out and almost full theaters across the UK, Spain, Italy, and Germany. So firstly, if you're in the US and you're watching movies and you're going to the AMC, comment down below, show that you're going to it. Don't let people think that we're faking this. But secondly, if you're in the countries I mentioned as well, across Europe, UK, Spain, Italy, and Germany, comment down below if you guys are going watching movies, and comment down below if you guys see that it's full or not. And again, this just shows the apes how well that we are doing. Now, a big thing with this that we want to talk about is IMAX Q4 earnings was said to be one of the best ever. So with this already, we can see how well movies and theaters did in the Q4. And this is how we know that the box office is recovering. Again, they won't try and apply this on AMC. They'll always try and make AMC as a bad player. But we know AMC did well, and we know that AMC owns IMAX screens as well. So you can understand how important this is. Now, something that people are talking about right now, and this could potentially be a play. Again, we still don't have the full kind of thing going on between AMC and GME right now. There was talks of acquisition, but nothing's been confirmed. But if we were to see a merger between AMC and GME or an acquisition, we can be looking at something that is huge. Because firstly, you can see GameStop upside turns AMC locations into hybrid retail hubs. And I think this is very important, is because if they are opening up GameStop within AMC locations, that opens up a whole new different inventory. And the reason for this is because they go side by side. If people want to go to GME and they have to go into AMC, you can see increased foot traffic plus monetization per get, because potentially they will want to buy snacks and maybe they would even go in to watch a movie. And there are also other gaming, live events, launches, and all of this. And so this is how we know that this is going to be well. Another big reason for GME going to AMC is that if people were to go to watch movies, and there's GME there, that will also increase traffic for GME as well. And so this is a win-win situation in my opinion, but this is something that they obviously have to work out, and it's still something that is in the air and nothing's been confirmed. Another thing about this is, of course, firstly, did anyone else come up with similar GME naked short sale numbers? Mine was 5.3 billion split adjusted. So this is the thing. AMC and GME both have insane amounts of naked shorts. You know, for AMC, we've seen 5 billion, we've seen 20 billion, we've seen more. For GME, we're looking at 5.3 billion right now. Again, nothing's been confirmed, but all of the numbers have been huge. And that itself just talks about the situation that it's ongoing. And the reason why I want to talk about this is because if we're looking at them combining, you can imagine how big of a situation this is going to become. You can see how all the naked shorts is then going to force all the pressure on the market makers, on the hedge funds that created these naked shorts. And so it's also another reason for why I think that partnership between them could be major. But it has to be something not just of a normal partnership, but actually coming in together. A big thing, and the reason why people are talking about this is obviously because GameStop has 9 billion, but the fact that is they could potentially borrow up to 3 times the cash. So they are sitting on 30 billion in buying power. And with that amount of money, they could obviously easily buy AMC or something of the sort. And it's like what I said, this could be a very, very big move. Now, if we talk about the macro things that's going on right now, one of the things we've been talking about recently is how there are OA recession signs again. This time is with UBS. Now, we're not surprised by UBS, and you can see everything that's going on here, all of the companies that are mentioned. So we're not surprised by UBS. The reason why we say this is because UBS are already seeing themselves in liquidity problems. And the reason for that was because of the AMC and GME swaps. And so now this problem of theirs has only just gotten bigger. Before, they only had to worry about the AMC and GME swaps. Now, the AMC and GME swaps has exposed all of their problems out. So not only do they have to manage that, but they have to manage all of the other problems that have been created. And that's the biggest factor that they are trying to prevent. If we take a look at another thing as well, and this is kind of just showing why the market is going down, because people are buying for the hedges. Gold, silver, oil, they are all in deep green. And this is just the reasoning. This is kind of just the showcase of the hedge to prepare the market crash that's about to happen. Because if you take a look at S&P 500 right now, 4.5 trillion in market cap since the Iran war began on February 28th. So this is how much money has been gone. And this just talks about how important this is. And we're seeing 4.5 trillion worth of collateral disappearing. That's why these short sellers have been trying to create all of these bad news on AMC. On top of this, so many insiders are selling as well. So this doesn't look like it's going to end soon. We're going to be seeing more and more value being wiped out from the stock market. And then finally, private credit defaults hit an all-time high of 9.2% last year. So if we talk about insolvency, if we talk about hedge funds failing, these private equity failing, this is what we're looking at. As always, none of this is financial advice, so do take out some consult, make sure your own due diligence research, and I'll catch you guys next time.